Hello and welcome to our YouTube channel. In today's video, let us learn about the escalation clause in insurance. In this short and informative video, we will explore what an escalation clause is and how it is applied in the world of insurance. Insurance is essential for protecting our assets and managing risks. However, as time goes by, the value of our possessions may change, and so do the costs associated with them. That's where the escalation clause comes into play. Definition of escalation clause. The escalation clause is a provision within an insurance policy that allows for automatic adjustments to the coverage limits or premiums over time. It ensures that your coverage keeps pace with inflation, rising costs, or changing market conditions. It can also be defined as a provision or rider included in an insurance policy that allows for automatic adjustments to the coverage limits or premiums over time. Purpose of escalation clause. The purpose of an escalation clause is to account for the impact of inflation or changing market conditions on the insured property or liability. Practical application of escalation clause to various insurance policies. Now, let's take a look at a few practical applications of the escalation clause in different types of insurance. The application of an escalation clause can vary depending on the type of insurance policy and the specific terms outlined within it. Here are a few common examples. Property insurance. In property insurance, an escalation clause may be used to increase the coverage limits of a policy to keep pace with rising property values or construction costs. For instance, if a building insured for $500,000 has an escalation clause of 5% per year, the coverage limit would automatically increase to $525,000 after 1 year. In property insurance, it can help account for increasing property values and construction costs. This means that your coverage limits can be automatically adjusted to match the rising value of your property. Liability insurance. In liability insurance, an escalation clause can be utilized to adjust the policy limits to account for potential increases in legal judgments or settlements. This ensures that the coverage remains adequate to address larger claims that may arise in the future. Liability insurance often includes an escalation clause to address the potential for rising legal judgments or settlements. As these costs increase over time, the escalation clause ensures that your coverage remains sufficient to protect you from larger claims. Health insurance. Some health insurance policies may include an escalation clause to adjust the premium rates annually based on factors like medical inflation, increased healthcare costs, or the insured individual's age. This helps to prevent the coverage from becoming inadequate due to rising medical expenses. In health insurance, an escalation clause may be used to adjust the premiums annually based on factors like medical inflation or increased healthcare costs. This helps prevent your coverage from becoming inadequate due to rising medical expenses. By including an escalation clause, insurance policies can provide peace of mind, adapt to changing circumstances, and ensure that your coverage remains effective over time. Understanding how this clause works can help you make informed decisions when selecting insurance policies that meet your evolving needs. It's important to note that the specific terms and conditions of an escalation clause can vary between insurance policies and providers. It's recommended to carefully review the policy documents or consult with an insurance professional to understand how the escalation clause functions in a particular insurance contract. Importance of escalation clause in insurance. The escalation clause in insurance plays an important role for both the insured and the insurer. Here are some key reasons why the escalation clause is important. 1. Adequate coverage. The primary purpose of an escalation clause is to ensure that the insurance coverage remains adequate over time. By adjusting the coverage limits or premiums to account for inflation or changing market conditions, the insured can maintain sufficient coverage for their assets or liabilities. This helps protect against the risk of being underinsured and facing financial losses that exceed the policy limits. 2. Mitigating inflation risk. Inflation can erode the value of assets and increase the cost of goods and services. An escalation clause addresses this risk by periodically adjusting the coverage limits or premiums to reflect the impact of inflation. It helps policyholders keep pace with the rising costs associated with repairs, replacements, or legal liabilities. 3. Cost management. For insurers, an escalation clause allows them to manage their risks and maintain profitability. By adjusting the premiums based on changing market conditions or inflation, insurers can ensure that the premiums charged to policyholders adequately reflect the potential risks and costs associated with the coverage provided. This helps insurers maintain a balanced risk portfolio and avoid potential losses due to inadequate pricing. 4. Long-term policyholder relationship. Including an escalation clause in insurance policies can foster long-term relationships between insurers and policyholders. By addressing the need for periodic adjustments, policyholders are more likely to maintain their coverage with the same insurer rather than seeking new policies elsewhere. It can also demonstrate the insurer's commitment to providing comprehensive and up-to-date coverage, enhancing customer satisfaction and loyalty. 5. Flexibility and convenience. An escalation clause provides convenience for both insurers and policyholders by automating the adjustment process. Instead of requiring frequent policy reviews or negotiations for coverage adjustments, the escalation clause ensures that the adjustments occur automatically according to predefined criteria. This saves time and effort for both parties involved. Overall, the escalation clause is important in insurance to ensure that coverage remains adequate, mitigate the impact of inflation, manage costs, foster long-term relationships, and provide convenience for policyholders and insurers alike. If you found this video helpful, don't forget to subscribe to our channel for more informative content. Feel free to leave your comments and questions below. Thank you for watching.